Okay, Shipa is a trader. The following transaction took place in January 2021. January 2nd. So see the question like this. So you will guess that it could be related to petty cash book or cash book, but we can see the question is not. Okay, so what we see is they asked to prepare the sales journal. Okay, total the journal and indicate the ledger account. Okay, I noticed that ledger account, some still not really clear what is meant by the ledger account. When we have the sales journal, this refer to the transfer to the sales account for the total. It's not the sales ledger, it's a sales account. Okay, because this ledger is a key account. Okay, let's see what is the information that we have. So they want the transaction, we put in all the and refer back to what book that we need to be used. Okay. So this is the date. And then book, we identify all the book first. Book of prime entry. Book of prime entry, we have 7 books. Okay. January 2nd, pay rent 450 by direct debit. The moment direct debit, this is the bank account. So bank account is a cash book. Okay. Bought goods on credit from Dilip. List price 120, subject to trade discount 25%. Bought goods from Dilip. This is the purchases journal. Okay, because bought goods. 6. Sold goods on credit to Kabi. List price subject to trade discount. So sold goods means sales journal. This is what we need to record later. On 9. Sold surplus office fitting for 110, which was paid by credit transfer. Credit transfer means bank account. The moment bank account, cash book. On 10, return goods to Dilip. List price. This goods has been purchased on 3rd Jan. Okay, this is the purchases. Okay, along the way, if you have any question to ask, please stop me and you can put into the chat or you can voice it out, okay? Okay, this one is purchases return journal. Next is 11. Pay 50 to Dilip in cash. This is a personal. That means this one, cash and bank always is a cash book using the cash book. 15. Cash sales 85 was immediately paid into the bank. So the moment bank, this one cash book. Next is 17. Pay office expenses by credit transfer. This is also the cash book. 20th. Sold goods on credit to Pari. So this one is sales journal. Next, on 21st, Kabi paid by check for goods he purchased on 6th Jan after deducting cash discount of 7.5%. So the moment paid by check, this is a cash book. So the check, so the bank related transaction all in the cash book. Pari paid 141 by check. So the moment check, cash book. 26. Sold goods on credit to Yas, offer him. So this sold goods on, this is sales journal. So the first one, they asked to prepare the sales journal. So let's put into here. Pipa sales journal. Okay. Date, detail. This dollar is a debit and credit concept. And sorry, this is sales journal. This is not the sales. This is not the debit and credit concept. This is a sales journal. General journal only is a debit and credit concept. Okay, here we have the transaction for the sales journal, sales journal, sales journal. Okay, 2021 January 6. Who we pay? Who is sold to Kabi? Okay, and here is a list price. So put the list price. And then we have the trade discount, 20%. Okay, so the list price is 200. 20% times 200. So we get 160. Okay, the next one on 20th. Okay, on 20th, we sold to Pari. Pari, they didn't mention anything. Okay, they straight away 150. So we just put 150. Straight away putting into here 150 because there is no calculation needed to be done. Okay, the next one on 26. So 26 is sold to Yas. And also same thing, we have the offer him discount 5% if he, but this 5% offer him if he pay with it. This is a cash discount. So cash discount is not appear in here, appear in the cash book if he pay earlier. So in this case, we straight away take 62. Don't put the discount because there is a cash discount. So just take this 62. So this is cash discount. So subtotal it first. And when we have the journal, sales journal or purchases journal, January last day is 31st. Transfer to where? They say ledger account. Transfer to sales account, not the sales ledger. Sales ledger is the account that record all the credit customer. So that is a different thing when we say sales ledger. So be careful with the word that we are using. This is a sales account. Okay. So now this one, give me a minute. Put it here so that everybody can use it later. Okay, now next is that they asked to prepare the cash book. So we put in the information first. Date, detail, discount, now, cash, bank. Okay, let's see, they got the opening balance, 2021, January 1st, balance brought down. Please look into it. So at least you'll see anything not sure why and you doubt, of the working that I put, just voice it up. So I copy up first. Okay, now because we already categorize all the transaction, so this second is a cash book. So what are the transaction? Pay rent 450 by direct debit. Direct debit, what is a direct debit? Direct debit. Direct debit is the amount charged by supplier and instructed by the business to pay the supplier. Okay, and this amount normally is amount not fixed. Okay, normally is based on actual usage. This type of the transaction, direct debit, suitable like for the mobile phone bill. Okay, this is very common nowadays. Mobile phone bill, we use the direct debit, or sometimes whatever bill in like TMB bill also you can use it. So in here we will have, okay, let's put in 2021 January 1st, pay the rent, no, pay what? Let me see. Okay, pay the rent. Maybe make it smaller. Okay, the rent is all this direct debit, whatever, all through the bank transaction. Okay, the next one, here settle on 9. 9 sold surplus office feature for 1/1, which was paid by credit transfer. Credit transfer is the transfer of the money into our bank account. So this one is the money coming in. So on 9, office fitting. If you want to put disposal, I saw someone put disposal also can. Disposal of, because normally the double entry we put through from the disposal of office fitting. If you didn't put office fitting, also can. Or you want to put sales of the office fitting, also can. Okay, this one, the amount is 110. Okay, the next transaction on 11, pay 50 to delete in cash. When they say pay delete without saying anything, this is defer to the drawing amount. No, delete is a supplier. So we have to put into the supplier account. This is not shipper. Okay, this one is on 11. So pay delete is a supplier. So this one is not the shipper. So pay 50 in cash. So go to the cash column, 50. And then on 15, cash sales 85 was immediately paid into the bank. The moment saw the bank, go to the bank and do the recording. So this one is 85. And this is a sales entry on 15. On 17, pay office expenses. Credit transfers. Credit transfer, that means you are transferring to somebody. Someone is getting the money. Okay, here on 17, pay office expenses. Okay, paid by credit transfer, so 30. Okay, next is 21st, Kabi paid by check for goods he purchased on 6. So the 6 is this amount. Okay, the amount that he purchased is 160 Kabi. So here paid by check for goods purchased after deducting. Okay, so here on 21st, Kabi. So the amount that we're going to take is 160 times, because he get the cash discount 7.5%. So this $12, and then for the paid by check is a bank. So 160 minus 12. So this is the amount that he paid. Okay, the next one, 24th. Pari paid 141 by check in full settlement of purchase made on 20th. So made on 20th, 650. And this one is they didn't pay 141. Okay, let's put in 24 Pari. Okay. Pari bought 150, but when he paid, he only paid 141 by check. And the word they use in here, in full settlement. In full settlement means that no more outstanding. So where is the difference come from? The difference comes from the discount. So the discount given by Shipa to the Pari, 141. Okay. And here is 141. So there is a mean by the full settlement. Full settlement means that this 150 pay off, no more outstanding. Okay, all the transaction we did, we record already for the cash book. So now what we got to do is, okay, let me put it to the side there, so at least easier for you. Okay, so we sub the total first. Okay, so this is the account that we have. Now what we got to do is we need to see the differences between the two sides. Okay, here we have 31st balance carry down 50. So take this minus 50, and then here minus and minus this. So this is the balance of 31st, and bring it to here. Make sure we complete, always complete debit and credit for the balance carry down, balance brought down. So February 1st, balance brought down. Okay. Now the next question they ask is, prepare the ledger account of Dilip for January 2021. Balance the account and bring down the balance on the first Feb. There was no balance on, so that means no opening balance for it. So what we got to do is, let's we put in Dilip. Okay, let's see Dilip account. I put into here side by side, easier for me. delete account, delete here dollar. Okay. It said no opening balance. The first transaction we have here purchases, here purchase just return. These two related to the delete. Okay. On the third, bought goods on credit. The double entry is debit purchases, credit delete, because delete giving out the goods. So delete giving out is in the credit side. Supplier account. This is a supplier account. Supplier. Okay. Generated purchases. Okay. And the amount is 120 because they say subject to trade discount of 25%. Means that the purchase only 75%. Okay, next is okay. On 10, return goods to delete list price. These goods have been purchased on the 3rd. When we return the goods to the delete, when we bought, we get the discount, trade discount. So when we return, so don't forget to deduct also the trade discount. So this purchases return is not 20 because I saw someone put in but not the amount, okay? So take 20 times 75% because when you buy, you get 25% trade discount. So when return also have to deduct 25%. Okay, next, what else that delete? Okay, here on 11, related to delete. So pay, delete, cash account credit. So automatically here will be debit because delete receive the money. So on 11, okay, delete receive the money. The money that he received is 50. Okay, after that, no more transaction for the delete, if I'm not mistaken. Okay, double check first. Okay, no more transaction. So the last day, 31st, balance carried out because this is a supplier. Supplier, we are owing them. Okay. Always remember, carry down, brought down must be complete. Don't forget it. Balance, brought down. Okay, so this will be the answer for delete account. Okay. Okay, the next one. Okay, here I think you all got it right lah, if I'm not mistaken, this one. Complete the table by place a tick to indicate which document delete was sent to the shipper for the goods returned on 10 January. This one is a credit notes, okay? Don't have the tick. So this is the answer should be, okay? Okay. For just for the information, in case the debit note they ask for. This debit note, who will send it? Shipa will send it. Shipa send to Dilip when Shipa return goods to Dilip. The purpose of it to ask for deduction on the invoice or purchase goods. Okay. To ask for deduction on the invoice or purchase of goods. I think on invoice due to give any reason, damage of goods or whatsoever reason. Okay, now next. Okay, here is a legal service. Legal service means that this account is a service account. Service account, when we have service account, our income statement preparation only have 3 sections. No cost of sales, okay? Only have revenue. If you have other income, but most of the time don't have, okay? And then expenses. Okay, so take notes that service account, no cost of sales. Okay, here they have fee. This is the main income, rent and rate, expenses, salary, stationery and advertising, electricity, bank charge. This is all expenses. When they have the office equipment, this is the, take note, if they prepare, depreciation. This one, disposal, proceed. This is a money received. We don't know how much we get gain or loss. Bank overdraft is a liability. Trade receivable, current asset, capital and drawing under capital section. So look into the information that we have in here. The annual rent is 16,000. On 31st December, rent was paid to cover the period from 1st Jan to 31st March. So this amount that paid here, annual rent, there was no accrued or prepaid of no beginning amount, but how come? This rent account, they say that the annual rent is 16,000. This information indicate to us our income statement amount in the rent account is 16,000. But in here, rent and rate 26,000. So rent and rate 26,000. Okay, and on 31st December, this is end of the month already. Rent was paid to cover the period from 1st Jan to 31st. So how much of it? Let's see. We have to see this one rent first. So this is the amount that we paid, 26,000. So rate of the rent. So here, rate of the rent were paid during the year. Rate paid is 6,000. Means that our rent paid is taking 26,000 minus 6,000. So this is the rent that we paid, 20,000. So this pay amount putting into here, we assume pay by bank, so 20,000. Okay, now next is this amount paid. Okay, here the balance, because no opening, so that this amount that we pay, which is the asset we pay in next year, this information, they say, paid on this 31st December 2020, this amount paid cover the period 1st Jan. This is the for next financial year. Next financial year pay in advance. So expenses pay in advance. So this is our asset. Okay, balance carried out end of the year, asset in the credit side. So this amount, we take this minus this. So this is a 4,000 that we need to deduct from here. Okay, from this amount. Minus to find the, okay, later on only we do the calculation. So this amount, we had to minus from here in order to get the actual incurred. Because this amount, 16,000, should be recognized. Okay, next. Here, rent rate 6,000 was paid during this payment cover the period from 1st Jan to 31st. This amount that we pay in here, only for the 1st Jan 2020 to 31st October 2020. Means that this only pay for 10 months. So that means there are 2 months didn't pay. So rent pay, didn't pay. Okay, next from 1st November 2020, annual rate were 7.5. The word they use is the annual rate. So for the rate, okay, annual rate is what 7,560. So if we want to find the 1 month, we have to take 7,560 divided by 12. So 1 month is, let me count, 7,560 divided by 12, 630. So 630. But we only pay for 10 months. So the accrued amount, accrued rate, which is your balance carried out, is 630 times 2 months. Okay, which is times 2, 1260. 1260. Okay, in your exam, all this working is very important to write beside your detail to get the mark. Especially like this question, the rent and rate, they give you more than 2 or 3 marks. Each working, you show the working, they give you the mark. So take notes, please do the working. Okay, now we want to, if we want to show the working in the income statement, what we got to do is we take the rent and rate account. In beside here, the actual amount that we pay is 26,000. But based on this rent account, okay, rent account, we had to take 20,000 minus this one. So we can do something like this. Okay, show the beside the detail. Because the amount that we need to minus is this 4,000. So we put in minus, show that 20,000 minus 16,000. Okay, and then minus, this one had to plus, this is accrued. Okay, prepaid end of the year have to minus. Okay, and for the rate, we have to plus this 1260. So we have to take 7 560 divide times 2/12, which was 2 months that we need to take. Show the working that how you get it. Or if not, what you got to do is you can do, show your working already and then put into here minus 4,000 and then plus 1260. This one also can be done. That means you already calculated your own self for the working and you just put this 4,000 and the negative minus and plus this one. So this one also can be used. Next, depreciation. Okay. Depreciation is to be charged on the office equipment at 15% per annum using straight line method. No depreciation is charged in the year of disposal. Here, office equipment. Let's see. We have office equipment disposed. And then what else they talk about? These 3 and 4 we do together. In February 2020, office equipment was sold 1,000. The equipment has been purchased for 1,800 on 1st January. The sales proceed has been debited to the bank and credited to the proceed of the disposal of account. No other entry has been made in respect. So in this case, we open the asset account, the cost office equipment. In here we have balance brought down 60,000. Balance brought down. Why we know this is the balance brought down and no adjustment need? Because the sentence saying here, the sales proceed has been debited to the bank account and credited to the proceed of disposal of office. This is a disposal account. No other entry has been made in respect of the disposal. That means here this one is opening 60,000. Okay, and then another account that we need to open is provision, because we need to calculate the provision account, the provision for depreciation of office equipment. Another account we open, disposal account. Disposal of office equipment. We have balance brought down, which is 22,500. And then this proceed of this 1,000, this is the bank amount, 1,000. Okay. Here, what else that we have? Okay. Now we put in this number 4 information before we can calculate number 3. The equipment has been purchased for 1,800 on 1st Jan. So that means this one is the cost of the equipment. So 1,008, debit disposal, credit the office equipment. Okay, this amount transfer debit and credit. Now they say that this asset bought on 1st January. What is your financial year that you are calculating? You are calculating 2020 from January 2008. So how many years that you use it? So your this disposal of the asset, purchase date on 1st Jan 2018. So until the disposal, they say that no depreciation is charged in the year of disposal. No depreciation charged in year of disposal. That means no depreciation for 2020. So how many years this asset had to calculate the depreciation? So how many the accumulated depreciation is how much? Is only 2 years, which is 2018 and 2019. Okay, because we need to transfer from here into here. So we use the 1008 times, according to it is a straight line method. So times 15%. And this one have been used for 2 years. So times 2 years. So 540. So here, disposal. And here, provision for depreciation. Okay. And then for this account, we have to calculate gain or loss because this one is going to the income statement. So in here we have 180, 1,800. So our income statement will be take this minus this and minus this. So this amount is a loss. Okay. Loss. Loss is going to the expenses. Now we can calculate the provision for depreciation. They didn't mention any purchases, so basically is we need to take the balance, carry down this amount to calculate our income statement for the depreciation. So this is for the calculation depreciation for the year to charge. So we take, because it's a straight line method. Straight line method, take the cost times the 15%. So this will be our income statement or depreciation amount for the year. So far, okay? Okay, let's move on. Let's see what else that we need to take notes. Okay, one of the Zamir client has become bankrupt. The moment you saw the word bankrupt, irrecoverable debt. The client owed 1,885. Zamir does not expect to recover. So the moment the word bad debt is this is a number 5, bankrupt. This is irrecoverable debt. This is the expenses. So 1,885. So all the item in additional information we already identified. So if we put in this account, you know which go to where, then we should be fine to do this income statement. So now we prepare the income statement. I need to use this information, so I put into here. Zamir income statement for the year ended 31st December 2020. Okay, so we need 2 columns. Okay, fee, they didn't say anything. They didn't say any adjustment to be made for the additional information. In this case, our fee should not have any adjustment. Fee income. So 151,750. If they don't have any adjustment, sometimes they didn't give you the mark. So this one, they didn't give you the mark. Okay. From here, we didn't see any other income. Basically, straight away, less expenses. Okay. What are the expenses that we have? We list down first. Later on, we look into the amount. Rent. Okay. For the rent and rate, as I said, show your working, how you get your answer. Okay. So here, the amount is this one. So we put in 26,000 minus 4,000 plus 1260. So the amount is 23,260. And then the next account, salary. Salary, they didn't say anything. So that means no adjustment. So put 55,000. And next is that stationery. Stationery and advertising. Okay, 6450. And next, electricity. Electricity also they didn't talk anything. So we just put in the amount. Electricity, 8,000. Okay, what else that we have? Okay, bank charge. Bank charge. 4100. And what else that we have? Okay, no more in here. Now is our depreciation. Depreciation of office equipment. Okay, our office equipment, here we already work it out. Okay, so what you got to do is show your working beside it. Okay, let me. Take 60,000 minus 1,008 times 15%. Okay. So this one put in. Try to show your working beside your detail. Huh? So here, because we get the amount already. We put it minus 1,008 times 15%. Okay, the next one, loss on disposal of office equipment. Okay. Show your working. Take the 1,008 minus, okay, minus 1,000, sorry, minus 540. And if you want to show your depreciation working, just show at the side there, 8,008 times 15% times 2. Okay, so here 1,008 minus 1,000 minus 1,008 times 15% times 2. Okay, 2,260. Okay, now what else? I think no more. Bankrupt here. Irrecoverable debt. Irrecoverable debt, which is 1,885. So all the account we taken. So now we can subtotal. So take this minus this. So this is our profit. So profit for the year. Okay. Okay, so this one for our this account. Okay, so done for income statement. Okay, the next account, the next they ask for it is, okay, statement of financial position, asset section. Asset means non-current asset and current asset. So, Zamir, statement of financial position asset section at 31st December 2020. They purposely give you 3 columns. They want you to show 3 sections for the non-current asset. Non-current asset. Here is your cost. Here is your accumulated depreciation. Whereas here is your net book value. What are the assets that we have in this question? We have office equipment. So office equipment, the cost, okay? The cost that in here, 5.8. We left with this one only. And then next is our accumulated depreciation, which is, okay, had to do, haven't do it. So this amount, balance carried out. This is the amount that we need to record. Take this, plus this, and minus this one. So this is our balance carried out for the provision. Okay, next is our net book value. Net book value is taking the cost minus the accumulated. So this is only one item for the non-current asset. So the next section that we got to prepare, current asset. So what are the items that in the current asset that we have? We need to see the information here. Okay, trade receivable. Okay. Trade receivable. But trade receivable, we have one irrecoverable debt in this information. So we have to minus. So take the trade receivable amount, which is 15,600 minus, okay, minus 1,885. So this is the trade receivable amount. Another account that in here, in the adjustment that we make, in the rate, rent and rate. Okay. This rent is a prepaid 4,000. So this rent 4,000 is other receivable. Other receivable. This is referred to the rent prepaid. Okay. So this amount take 15,600 minus 1,885. Okay, and then this one is 4,000. So take these two, add up. So we here plus. So this is our total asset 452. Okay, that's all, because they didn't ask for the complete, so we just do according what they asked to do. And all your this amount must be correct, okay, to get individual. Okay, now next is that here they say suggest 2 possible reasons why Zamir required a bank overdraft. Okay, most of you, I think this can get it, but only thing that when you write, try to be use the business term. Okay, try to use the business term. Okay, the bank overdraft incurred. One of the possible reason is that maybe Zamir bought what is the thing? Let's see what other thing. What he bought a lot. Because there's no purchases of the non-current asset. No purchases of non-current asset, we cannot say about it. Here, the main thing, you saw the drawing. The drawing is 65,000. So this drawing is a lot. So in this case, we do huge draw huge cash or goods, huge cash, no goods, huge cash for personal use. So that's why he has the overdraft. That is the main reason. Drawing is high. And then number 2, let's see what else. He's making profit 44,000, but he go and withdraw 60,000, 65,000. What else that we have here? Okay, we can use the expenses. Okay, talk about the expenses. Pay expenses. In this question, I cannot use the pay for the office because they didn't mention any purchases. So I have to assume this all the non-current asset purchase in the previous year. Okay, here pay expenses. Pay expenses for day-to-day operation. Okay, next, Zamir employed Sharif, who is another lawyer. Sharif also keep the book of account for business. Zamir would like to ensure that Sharif does not leave to start work for a bigger business. So basically, he also a lawyer, and also he do the account for Zamir. So he do 2 jobs. Okay, Sharif is doing 2 jobs. One as a lawyer and also the bookkeeper. So 2 jobs that he function. So advise Zamir whether he should offer Zarif an increase in salary or invite him to become a partner in the business. Justify your answer with the 2 advantage of each. So the advantage, if you increase salary, here Sharif will get better pay, so he will put effort to do more job. Okay, this could be the happen. For the advantage other than this, stand from Zamir point of view. Zamir does not need to share the profit with Sharif. Okay, if the business doing better than before, so everything is belong to him. So that is if increase the salary. Next, if he invite as a partner, invite Sharif as a partner. So for this one, I believe Sharif will be much more happy because as a partner, you can share the profit. So Sharif will be happy. But this question is stand from the Zamir point of view. Try to think from Zamir point of view. What is the benefit? So Sharif will share more workload with Zamir Other than share workload, more important is Sharif may able to recommend more client to the business because more profit they can share more. So able to recommend more client to the business. What else that we can think about? When as a partner, the benefit of a partnership, workload can be shared, profit, more revenue increase. So this one, revenue will increase because, okay, so this one revenue increase. What else that the possible benefit as a partner? Share the skill, okay. Share, Sharif can share his professional skill or expand or provide more business, but more service to client. Okay, so this is the answer that we can use for this. Okay, next is question number 3. Rachel prepared her trial balance on 31st. The total of the debit side was more than the total of the credit side. That means we have a credit balance. So this suspend account will have the credit balance because debit more than the credit. Explain how the use of suspend account allow a draft statement of financial prepared. Suspend account will balance the trial balance. The business can use the trial balance to proceed with financial statement preparation. Okay, how allow the draft the amount in suspend account will treated as temporary account in statement of financial position if the suspend, this question suspend is in the credit side. If the suspend account has credit balance, it will record in current liability. So this is a temporary account that we can use in order to prepare the statement of financial position. Here, Rachel later discovered the following error. A repair to the premises debited. This is the error of principle. See what the question they ask. Okay, they ask to prepare journal. So then we straight away prepare journal. General journal. Detail. Journal is a debit credit concept. Okay. So this debit and credit concept. Okay, next, continue. Okay, information number 1, the correction of the error. We need to reclass it from the premises to the repair. Okay, so repair of premises and credit the premises account. Because we are wrongly debited, so reverse it up. So this error we call error of principle. Number 2, okay, they say narrative are not required. That means don't need to write the reason. The purchase of the motor vehicle 3,400 on the credit from Neil Hugh has not been recorded. This is the omission. So we record motor vehicle and credit Neil Hugh. E400. So this is the error of omission. Okay. Next is number 3. Both the sales journal and the purchases journal has been overcast. This one, I saw someone give the, I can't who is, this is talking account, not the journal. Don't write sales journal, don't write purchases journal. This is talking about the account. You can put sales account or purchases account, but not sales journal or sales purchases journal. Because you want to get 1 mark, that means everything you must correct. Your detail must be correct, your debit side correct, amount must be correct or whatever. Then only you can get 1 mark. So this one, that says sales journal overcast. Sales is in the credit side. Overcast means extra. We have to debit sales account, not sales journal. And purchases also overcast. Overcast means that you extra recording. So debit sales, credit the purchases. Okay. So this one is the error of compensating. Compensating error compensating. Compensating. Okay. Next is number 4. Return inwards 19 has not been recorded. Return inward has not been recorded in the return. Okay, this is a one-side error. Return inward is a return inward is a sales return. Okay, I think most of you, if not mistaken, you all put the return inward. That is fine. If you want to put sales return, also can. So sales return is in the debit side. So this one did not record. So sales return 19. And because it's a one side, so we have to use suspend account. So suspend account 19. Next is 5. Bank interest received 25. This is received means it's income. Has been debited to the bank charge. Bank charge is the expenses. The entry in the bank account has been correctly made. That means one side error. So this number 5, bank interest received. This is an income. Okay, income is in the credit side. Bank charge is the expenses. Expenses is in the debit side. So now we have to make a reversal out. So we have to put in this one. I have to reverse it. Bank charge. I need to credit out the amount 25. In here, bank interest received. Bank interest received. This bank interest received is my income, should be in the credit side. So this total I have to put into the suspend, which is 50, double up the amount. Okay, so now all the entry for this one we have done already. So I need to put into okay. So take notes all these entry that we made. Okay, now next is see what else they ask. Okay, state the number of the error which is a compensating error. Okay, compensating error here. Okay, number 3 is a compensating error. So your answer, number 3 is compensating. An error of an omission. Omission here. This one, number 2, is the error of omission. So this one is error of principle. This one is a one-side error. Okay, now next is, they say, complete the table to indicate the effect of each error on the gross profit and on the profit for the year. The first one has been completed as an example. So next, I need to effect of the error on the gross profit. Then give me a minute. I need to copy this one to there. So easier for me. So I will put the remark at the side. Here, repair. Repair is expenses. 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 When we debit, okay, this error we understate. Expenses understate. Okay, expenses understate. Profit overstated. Okay, so that's why here they say no effect and here overstated. Number 2, motor vehicle. This one is a non-current asset. This one new is a other supplier, other payable. So this one is current liability. So in this case, this one no effect. No effect on gross profit and profit for the year. The third one debit, one credit. Sales is sales. This one is revenue because we overstate the revenue overstated. Okay, revenue overstated, gross profit overstated. Gross profit overstated, profit overstated. Where else come to the purchases? Purchases also overstated. Purchases overstated. Cost of sales overstated. Cost of sales overstated. Then our gross profit understated. Okay. Gross profit understated. Profit understated. One increase, one decrease. Gross profit over, gross profit under. Net off. That means eventually no effect on, because gross profit over and under stated. So that's why no effect on it. Okay. Now next is sales return. This is sales return reduce revenue. Okay, but because we are omitted to do this sales return record, so our sales or our revenue overstated. When revenue overstated, gross profit and profit for the year will overstated. So in this case, this gross profit increase, okay, increase by 19. Okay, let me put in the so number 2 is no effect. So this one, you put a tick here. No effect for both. Okay. And then number 3 is this one, also no effect. Okay. Number 4, this sales return reduced revenue, but we didn't do, so revenue overstated by 19, and then our profit also overstated by 19. Okay, now next is suspend account. This one, bank charge. Okay, our bank charge wrongly debited. Expenses overstated. Expenses overstated. Profit overstated. Gross profit no effect. Gross profit no effect because expenses is not under the gross profit. Bank interest revenue. This is an income. So income understated. So income understated. Wait, let me see. Bank charge. Sorry, this one's wrong side already. This one should be expenses overstate. Profit should be understate. Profit understate. Okay. Expenses over, profit under. Gross profit no effect. Income understate, profit understate. understated. Gross profit, no effect, because these two under the income and expenses section. So in this case, for this one, gross profit will be no if. How come? Okay, this one no effect, but our profit will be understated 2 times, which is 50. These two added up. Okay, now next move on. State why a balance may remain on the suspend account after error. If we have the error still remain in suspend account, it show that who is this business name? Right, Rachel. Okay. That Rachel still not find out all the error. Okay, so that is could be the reason that still have the error, not finding. Now next move on. Okay, Chaya provide the following. This credit sales, credit purchase, gross profit, inventory. Okay, see what they ask. Okay, working and answer. Okay, I will add one more column for the formula so that at least you can use it. Ratio, formula. This question didn't ask for formula. I just put something in so that at least you take notes. Working and the answer. Okay, this question, the answer, they didn't mention that, or they got say 2 decimal or this one. So we put accordingly. Okay, gross margin. Okay, the formula for the gross margin is taking the gross profit over the revenue. It's 100%. Okay, so using the information here, we work out. Okay, how are we going to find the information? Let's see. Credit sales, gross profit. So they got this one. Here the gross profit is 51480 divide credit sales 114,400 and then times 100%. So this is the working, and the answer will be 51480 minus divide 114,400 times 100%. So here put 2 decimal. Okay. Next is trade receivable turnover day. And the formula will be trade receivable divide credit sales times 365 days. Okay, the working, okay, the trade receivable here 15400 and then divide credit sales 114,400 times 365 days. Okay, here 15400 divide 114,400 times 365 days. So in here, when we have 41 days, they want to round to the next whole day. So your this answer, you must put, okay, put 50 days. Write the answer in day. Okay. Calculate already. Show your working already. Show your this working. You get just now how much already? Let me use calculator for 15400 divide 114,400 times 365. 49.13 day. So they say round to the whole, okay? That means must be go up, round up, not round down. Okay, even though this one's 0.1 is less than 5. So this is slightly be careful. Okay, current ratio. Current ratio is a current asset to current liability. So here we have our current asset, we have 2850 plus 15400 to 7430 plus 6190. 2850 plus 15400. 1825. One, 3620. Okay. So here, based on the booking, we count 18250 divide 13620. So we get 1.34. Had to round up one decimal to 1. Follow the instruction. They want 2 decimal, we put 2 decimal. So now next is that Chaya is comparing her ratio with those of Sarah, her main competitor. Based on Sarah's most recent financial statement, her trade receivable turnover is 28 days. Here he has 50 days. Okay. Compare Chaya trade receivable turnover with Sarah trade receivable turnover. 3 marks. Okay. Trade receivable turnover for Chaya is 50 days. For Sarah is 28 days. From the number, first sentence, use the number to answer the question. Chaya has almost double of the trade receivable turnover compared to Sarah. This is the first sentence. Second sentence is show that Chaya has very bad control on his credit. Very bad on his credit control on collection. So this is what we can see from it. So when we have this problem, what could be the problem that Chaya will face? Chaya has almost double, okay? And it shows that it's very bad. What could be the consequence of the Chaya? Chaya, this one is, your answer can be a lot, so long as, how to say, I would say is that your business sense is there, then it's fine already, okay? Chaya may face the high, has high risk of irrecoverable debt compared to Sarah. Okay. So what he has to do? Okay. What he had to take the action. Chaya has almost doubled. He showed that very bad control. Chaya has a high risk of irrecoverable debt compared. Okay. Okay. So the next is. Okay. Okay. I think about positive one. Due to high, due to credit term is higher for Chaya, he may easier to get customer to buy from him and may have higher revenue. This is just assumes that because normally you give people credit term high, then you should get more people like to come to buy from you. That is one of the good thing that he has. But this one is 3 marks. I think the first paragraph should be enough. Okay, now next, state 2 problem with the inter-firm comparison. So inter-firm comparison is that we need to think about the size, think about the location, but because they say that this one is a main competitor, they mean they should be the same location. Okay, but the size we don't know because they didn't mention about the size. But normally it's a sole trader and sole trader normally should be about same size. But in terms of in terms of the how long the establishment of the business is important. Okay, so one of the problem for inter-firm comparison, inter-firm comparison. So here I didn't talk about the location because they are main competitor. So I talk about the establishment. Okay, the period of the business has been established in the market. The longer of the business started should have more customer base. So that is could be the one of the information that we can put. The second one is what else that we can talk about? Accounting principle. Okay, accounting practice such as accounting practice and method used may be different for two firm use. So different method have a different impact. For example, Chaya may use straight line for depreciation, but Sarah may use reducing balance for depreciation. So there is a difficulty about different accounting practice or methods. Chaya is considering stop selling on credit and instead selling on cash basis. Chaya will offer a trade discount of 12% to regular customer in order to maintain the good relationship. So 5 mark. Justify your answer by giving two advantage, and they say that she should start to make cash sales only and offer the Chaya should start to make cash sales. Chaya may, I won't say should, may start with cash sales and offer the trade discount because it helps on her cash flow. She will get cash in immediately after sales and reduce the risk of irrecoverable debt. At the same time, she gives trade discount will encourage her regular customer to buy more from her. The revenue may increase. Okay, so this one is about the advantage of change to cash and offer the discount, trade discount. But the disadvantage of it, by changing to cash, the customer cannot afford, may stop buying from Chaya. Chaya will lose the customer and revenue reduce. So this is a one possible problem that she faced. Another is that by offering trade discount to existing or to regular customer may not a good idea because the regular customer will come back to buy again from Chaya. So this is something like this is a loss to Chaya if the loss of revenue, if Chaya, if the regular customer did not increase their purchase. Okay, so this is the benefit and the disadvantage of it. Okay. Next is last question. Maria opened a shop on 1st Jan 2020. She provided the following trading information: gross profit, profit after purchases, carried image, inventory. Calculate the cost of Maria inventory at. So here we have, okay, so they want to find the change. So we use the simple income statement to open it, okay? Income statement. So we have revenue, we less cost of sales, we have opening inventory, we have purchases, we have the carriage image.
Teacher, you didn't discuss 4D.
Oh, 40, sorry, let me check. Sorry, here got still some more. Okay, wait, okay, D. State 2 reason why Chaya employee will be interested in her financial. This is employee. Employee only care about the salary, whether got increment or not. So we talk about their increment. The employee want to know the increment of their salary if the business perform well. Other than that, if the company doing well, you have the prospect to work longer there. So the employee want to know whether they can work, they can continue to work with Chaya if the business is doing well. Other than that, talk about the increment, talk about the salary adjustment, negotiation with Chaya. If the business doing well. So next is number 2. Say 2 type of the user other than, okay, here I think most of you get it right. Government, and then supplier, and then customer, and then prospect, investor, That means the new partnership or whatever. What else that banker or lender. Okay, now let's move on to the question 5. Okay, here to find the cost of the inventory. Okay, closing inventory. Okay, here we do not need to do it because they give us this amount. So in this case, this one can skip it because they give it the quantity already. So to calculate the inventory, okay, this one is a closing inventory, because since they're given the quantity, we take 130 quantity times they have purchases price, they have carriage inward. You have to take 70 plus 2, then get the answer. So 130 times 72. So 130 times 72, 9360. 9360. So this is the amount that we get. The next one is they asked to prepare. Maria has not kept all the sales made on the cash. The sales for the first year. This is the sales amount during the year purchase 1/4. Cash was paid on this unit. So Maria took goods from business during no recording have been made. Okay. They want to prepare the income statement trading section. And we put into here income statement trading section. So here we have revenue less cost of sales. Because this is open, that means first year, no opening inventory. Purchases, and then carriage inward. Okay, our purchases, we take 1,004 times 70 per unit. Our carriage inward, we take 1,004 times $2 per unit. Okay, we get revenue is 10800 plus 12000 for the first 2 months, and then plus, oh, this is 1 month. Oh my God, give me a minute. I need to, okay, here I have to take 10800 because each month, for the first 2 months, each month, that means times 2. And then plus 12,000 times 8 months. After that, last 2 months, 16,000 times 2. So this is our revenue. Our cost times 70. Our carriage inward times 2. So this is our total purchase. And less closing inventory, which is 9360, which is we calculated in here. So we take this minus this, and take this minus this. Okay, our gross profit, let me see. Oh, here they got one more item. Maria took goods for the business use using no recording keep for this drawing. So in here, insert. Here we should less drawing, but how much we don't know. So what we got to do is gross profit So this gross profit, we have to take 40%. This one is 40%. 40% of the revenue. So we take this one times 40%. So 60,000. Now we can calculate backwards. So in here, we take this, minus this, we get this. So we want to find the drawing. We take this, take this, minus this, and minus this. So, how come? Where's setting go from this one minus this? Okay. So this one, 60%. Okay, so our drawing amount is 144. So this is the information that we have for this section. Okay. Now next is let's finish up this question. Okay, Mara has been too busy to keep the book accounting record. However, she's now considering using the double entry bookkeeping for her business. Advise Mara on whether or not she should start to keep a full set of accounting record. Justified. There are there's advantage and disadvantage. So advantage of advantage number one is easier for Mara to check the error, if any. So there is save her time to find the error if the sub ledger can be detected. Understand what is called sub ledger? Sub ledger means that your file ledger, sales ledger, purchases ledger, and the general ledger, cash book, and petty cash book. So this is your ledger, can easier to detect. Other than that, is advantage of it. Account is more reliable. The government more reliable and easier to prepare financial statement and submit the tax computation to government. Okay, so this is the advantage of when we have a full set account. Disadvantage is Mara may need to incur staff costs due to preparation of account recording need some knowledge of accounting standard. So this is a extra disadvantage that appear. Second is that what else that we can talk about? Too busy for one person to prepare. Okay, disadvantage. due to the business just started, it may not have so many transactions to keep track or record. She,
Jeffrey say he restart his laptop.
pardon?
Jeffrey say he restart his laptop.
Do you mind to put into the chat because the sound is very soft? I see from the chat what you put.
Okay.
Can you put into the chat what you say? Jiwan, can you put? Okay, let me see. Oh, okay, okay. Okay, okay, okay. Okay, good. Okay, sorry. Okay. Due to business just started, he may not have so many transactions to record. She also busy to do her business and do not have time for the recording. So this due to this, so if he prepared it, she don't have the time to do her business. That is the disadvantage of it. Okay, now next. Place a tick in the correct column to indicate the Maria book or prime entry which each of the following should be taken. So let's continue. Okay. Discount received from the supplier. Discount received we put into the cash book. Okay, so this one we will record in the cash book. Next is that credit notes. Okay, credit notes received from supplier. Credit notes received from supplier. Purchases return. And come to this one. Direct debit paid. The moment paid, money go out. Money go out is a cash book. Okay, now next. Complete the table by placing a tick in the correct column to indicate a Maria. The accounting objective is described in each of the statements. So this one you have 4 objectivity, but they only give you 3 objectivity. Okay, Maria financial statement should be free from the significant error. Significant error is free from the free from the error and bias. This one is reliability. Reliability means can be trust. Okay. Next is Maria financial statement should be provided in the time for her to use when make decision about the shop. This is a relevant. Information is relevant for her to make decision. Okay, before don't go up first, I need to put in some notes so that at least you can use it easier for you. Give me a minute. So try to read these notes for your this part. Okay, and then what else that I need to take? Need you all to take notes. Not much thing for this one. Okay. Mainly more toward the theory. Okay, very good. Okay, wait. Let me see what else that I need to put in before. That's the more toward theory that question. See on it. Okay. So let me see what this one or not. Interested party. Wait, ah. Cannot copy something. Okay, so this one I want to put in for here. Try to put into here. Okay, so this one, try to read it because I noticed that so far, given basically your calculation is there. The only thing, the theory you must read. Okay, because different situation you need to explain different way, but basically more or less are the point are the same. So try to use the information that you have in the notes to read more so that you can help you. Okay, wait. Let me see what else that I can put in. Okay, interested party. So let me put in first, so that you all can use it. Okay. So for basically this paper has done. So what I need you all to take note is that by looking at this rating, okay, given you got good chance to get the A star. Try to improve your theory section. Your calculation part, most of time, I see should be fine. Just only take note some calculation. Only theory part you need to improve. Okay, so that's all for today. Anything? If don't have any, then we can end already. No, can end already. You can